Working capital, friends, please remember at the outset 90% of the times, whenever and wherever company closes anywhere in the world, the research shows 90% of the times the reason for the closure of a business is bad working capital management. And research also shows that in 90% of the times, when a company revives, it revives because of efficient management of working capital. That is the significance and importance of working capital. And let me tell you at the outset, management of working capital is not the responsibility of the CEO of the company, board of directors of the company, managing directors of the company, owners of the company, investors of the company, CFO of the company, COO of the company, CMO of the company, CPO of the company. Working capital management is the responsibility of everyone working in the organization, and that is the significance of working capital. And why it is responsibility of everyone working in the organization? Because working capital management, remember, is less a matter of knowledge, is more a matter of attitude. It's more a matter of culture. It is not that everyone has to work on inventory management. It's not that everyone has to work on receivable management. It is not that everyone has to work on the cash management. It is not that everyone in the company has to work on payables management. What everybody has to work on one thing, and that one thing is, remember, a rupee, a dollar saved is a dollar earned. A dollar wasted is a loss earned. And that is what is to be remembered, and that is the culture that needs to be built in any organization. If this awareness is there across the organization about the working capital, the working capital management will automatically improve. And why will it will automatically improve? Because then everyone is conscious and aware of the cost of bad working capital management. In this context, friends, first let's understand what is working capital. Working capital is very simple. Working capital can be understood, and please pay attention, working capital can be understood, number one, as gross working capital. Gross working capital. Now, what is gross working capital? Gross working capital would mean inventory plus receivables plus cash and bank balance. Total of these three figures is gross working capital management or gross working capital. Number two, working capital can also be understood as working capital gap. And now what is working capital gap? Working capital gap is gross working capital minus trade payables, and that is working capital gap. And then working capital can also be understood as net working capital. And what is net working capital? Net working capital is working capital gap minus bank finance, and that is NWC. So please remember, if we have to have a strong hold on working capital management, we need to first understand what is gross working capital, and that is total of inventory, receivable, and cash and bank balance. Then we need to understand what is working capital gap. And what is working capital gap? Working capital gap is gross working capital minus the trade payable. Trade payable is what we have to pay to our suppliers. Then we need to understand working capital as NWC. And what is NWC? NWC is working capital gap minus the bank finance, and that is NWC, net working capital. We can also understand working capital as OWC, operating working capital. And how do we understand OWC, operating working capital? Operating working capital is total of inventory plus receivables minus payables, and that is operating working capital. Any business across the globe has to focus on the working capital management. And please pay attention why? Because working capital costs you and cost you very dearly. If a company is carrying excess inventory in its warehouse, remember there will never be an entry in the books of account that interest on account of excess inventory. There will never be an entry in the books of accounts. But remember, the interest is levied to the company on account of excess inventory. And why is that so? Please understand this. And that is because if I am carrying extra inventory in my business, to fund that extra inventory, I am taking extra borrowing from the bank. And if I am taking extra borrowing from the bank, remember I am paying extra interest because of that excess inventory which I am carrying in my business. And that is what we need to remember. So, to understand the working capital, what we need to do, number one, we need to understand what is gross working capital. Number two, we need to understand what is working capital gap. Number three, what we need to understand is NWC, net working capital. And number four, what we need to understand, the operating working capital. And what is operating working capital? Operating working capital is inventory plus receivables minus payables.